Hello everybody, Jim Malone here, coming to you live on Dallas Trading Floor. And it is a Monday, and it looks as if got some interesting news for you. And it's basically on the Tesla split. But before we get into that, let's get into some of the other stuff here. Let's take a look, and it looks like basically all the major indexes are down except for the Russell and the Dow Jones. The Dow Jones is up just 0.05%, not a whole lot. The Russell 2000 is up a little bit more. Of course, that's the broadest index. And the S&P 500 is down, and so is the NASDAQ. So kind of a really tough market to trade here. We're in sort of in this confirmed uptrend, but not with as much power as I'd like to see it. I did make some adds to my portfolio today, and basically, they're basically two things. Of course, I'm in the semis. Of course, I did buy On Semiconductor, and of course that is an interesting semiconductor company because they do manufacture their own chips in Arizona, unlike NVIDIA, which took a absolute swan dive today. They warned NVIDIA warned on their profits, and I think part of the reason for this, of course, is that they make their chips at TSMC, Taiwan Semiconductor Manufacturing Corporation, which is in Taipei, and of course, this political situation right now in the straits between China and Taiwan are very, very tenuous. Of course, that's about where 40% of the high-end chips are made. So we're starting to see some of the companies that depend on TSMC, we're starting to see them sort of pull back, and the companies that do have chip making capacity in other places like the United States, those are tending to be a little bit better. I did also double my position from a half position to a full position in Petrobras. This is, of course, the Brazilian national oil company. It's up a little bit today, about 6%. Actually, it's doing pretty well. Again, it's a very cheap stock. It's currently selling at $15.35 a share. And of course, these are ADRs, American Depository Receipts, and they're basically, they're the Brazilian stock, but they're traded in New York in dollars. And that was up about 90 cents today, with about a 41% increase in volume. And this is Petrobras based in Brazil. On other ones, Cheniere, I do have a position in Cheniere. Cheniere symbol is LNG. This company is the big liquefied natural gas company. And of course, with the shortages of natural gas in Europe due to the cutoff of the Nord Stream 1 and 2 pipelines from Russia to Germany, the ability to import gas will become a very big issue. Interestingly enough, Germany, which needs the gas the most, does not have capacity to offload it, but there is a LNG facility in Poland, and so they're pretty well fixed, and they're going to be probably buying product from Cheniere. Now, Cheniere, of course, operates a natural gas train in both Sabine Pass, Louisiana, and in Corpus Christi, Texas. So, very interesting company, and it is moving very nicely. Currently, the price on that is $197, a share, and it's up today about $1. Not a whole lot. Volume is down on this, and of course it's down. I do hold also a position in ExxonMobil, and that has moved up a little bit. It's been pulling back for quite a while. Very low volume. It's up basically 0.5%, so not a whole lot. I did take a position, half a position in Tesla, and we'll be talking about that in just a second. And then, of course, I have a position in Analog Devices. That's another chip company. And then I did make a purchase of Ollie's Bargain Outlets today, and that is a discounter that probably will benefit when many of the stores have overstocks and they need to sell them. This is a company that sells overstocks, and many of the big retailers like Walmart and other ones, they are sitting with tremendous amounts of inventory that they cannot sell. some of these companies will discount them, and it will be probably Ollie's Bargain Outlet that will be selling them. So it's a very interesting company based in Pennsylvania, so of all places. Just wanted to talk a little bit about the Tesla news, and of course, yesterday, Tesla, the board of directors on Friday approved well, actually on Thursday after the close, but on Friday approved a 3-for-1 split in Tesla. Tesla is going to be splitting 3-for-1. Now, the interesting thing, I had a little bit of pre-earnings information on this that was incorrect, so I want to set the record straight out there for everybody. The date of record is August 17th. So basically, you'll need to own the stock by August 17th. Anybody that owns a share of Tesla on August 17th will receive will receive 2 shares after August 24th. So basically, if you buy the shares up until the 17th, then you'll be of record, and the of record people will get the benefit of the share dividend. So if you have 1 share, you will receive 2 shares as a dividend, and for a total of 3 shares. Of course, the price will will fall due to that. But the first day of the split adjusted price will be on August 25th. So very interesting there. So it's a 3-to-1 split. The date of record is August 24th. And the date that it's going to trade as split shares is the 25th. So very quickly, I did a little bit of a study here on how the price history worked on the last the Tesla split, which was 5-to-1, and that was back in August 11th of 2020. Tesla split 5-for-1. The price on the day of the close, on the day that they announced in 2020, was $274 and 88 cents. By the time the date of record happened and the shares started trading as split shares, the stock had moved up to $498.32, or essentially a 81% increase in price. Now, obviously, this time I don't think it's going to be that way. This is a 3-to-1 split. It's not necessarily as big as the split back in 2020. There's lots of overhead supply on Tesla, but it does give you an idea of how it can move. So if you're watching the screen, I have put up the numbers there, basically showing the closes and how it ramped up. Also, this is a little bit of a graph here, kind of shows you how it went from about the mid 200s way up to almost $500 a share, and that was in the space of basically less than a month. And so that may or may not happen this time. I doubt it will go up 80%, but it's likely to move higher. Typically, the way I like to trade, these splits are to buy the stock when it's announced and then sell it. Sell it right before it splits, because that typically shows the biggest increase. And then when it splits and starts trading as a split share, then wait for it to fall. Typically the stock will fall, and then you can rebuy it again. So what I'm doing here, and I did today, I moved in with a half position at $8.81 a share. We'll see how it closed. I'm gonna pull on over to the chart. TSLA, of course, is the symbol for Tesla, and we got to close kind of down a little bit. It's up after hours. It's it's going to be volatile, obviously, but look like it. Oh, there we go. Yeah, there we go. I think our camera's back. Okay, we had a little bit of trouble with the camera. It did close down 874.70 after hours is where it's trading currently. I did buy it at 881, so I'm down a little bit on this. We'll see what happens. It's moved down to the it's basically moved down to the 10-day line, and we're getting some support there. We'll see how it trades. The thing about Tesla this time is there's an awful lot of overhead supply above about 900. I'm hoping, of course, that it will move above that, but there's a lot of overhead supply right about the 900 level, and then the pivot is way up here, believe it or not, at 12.01 per share. And this is, of course, non-split adjusted. So we'll see how this trades. If I do get positive action tomorrow, I'll bang another half position, and then into the date of record, which is on the 24th. So that hopefully kind of gives you a look-see at this. Here is a stock that I did buy today. It's Ollie's Bargain Outlet. It's up about $1 today. It's not, it could be stronger, but I do think this area is an area of concern for a lot of people. They are going to be shopping, but they're just not going to be shopping at a lot of the stores. This store specializes in overstock, so we shall see what happens here. So thanks for bearing with me. One last thing, just to kind of show you the condition of the small portfolio, mostly still in cash. And again, I have Petrobras, ExxonMobil, and onsemi, and then I did buy, it doesn't show it here, but I did buy Ollie's Bargain Outlet today. So that kind of gives you a rundown of kind of where it's at. So let's go to the questions. Thanks for holding and being so patient. Appreciate it. All right, so question, AAR. Let's look at the AAR real quick to see if there's, to see what's going on there, basically. AAR and AAN. And hopefully we'll have something for you here in just a second. A little bit of a lag on our system today. Let's add that in. All right, there we go. And it's not Tesla, it's AAR, so it's pulling up the chart as we speak. So thanks for the holding there. Gosh, I don't know why it's so slow today, but it is very slow. Let's see if I can. Let's see if I can spin this up a little bit and get this moving faster. All right. Well, I'm still not getting it to pull the chart. I don't know what's going on or why that's the case. Let's see if I can move it around a little bit. Maybe that'll make a difference. Still having a little bit of difficulty sharing my screen. Let's try it again. Hopefully this will work this time. For some reason it's just not giving me the correct info here. All right. All right, AAR. There we go, Aaron's. You would think I would get this one right. Let's pull up the screen here, and there we go. All right, here we are with Aaron's, and it's basically, it's a Lisa-owned furniture company, and we're probably pretty familiar with it. If you might have actually used this company. They do rent-to-own, they do furniture rental, and I think Court Furniture is the only other real competitor here. It is starting to make some kind of move here, but it is still well below the 200-day moving average, and I am not a fan of buying stock below that 200-day moving average. The reason is because money is flowing out of this issue currently, and the relative strength is low. The relative strength on this is 9, making the rest of the market basically 91% of the market is stronger than this stock. So not something I'm likely to see. This is in a downward trend. I would have to say on this one, and maybe there is a silver lining here. I'm looking for it. Checklist of 44. That just doesn't do it for me. Basically, on this one, I just think I would pass. I just don't think it's I just don't think it's viable. So I'm going to pass on this one. And I think that you just got to get something that's a little bit stronger. It's going to be a little bit stronger. So I would pass on this issue. Aaron's company. I would just pass on it. I just don't think it's worthwhile to buy it. You're buying trouble. Okay. All right, let's look at MOS and look at that real quick. And that's Mosaic. This is a fertilizer company, and of course, with the worldwide famine going on, this one had been doing very, very well. It reached its peak, basically 79.28 back here in April. It's been in a downward trend ever since, but it looks like it may have gotten a reversal. It is trading above the 200-day line, so it does check one of the boxes. It's super important, and of course, that is trading above that 200-day line. It's just not a good idea to buy a stock that trades below the 200-day moving average, because that means that, in general, the institutional money is flowing out of that issue. Currently, the relative strength is 94 on this one, so quite good. It's in the top 6%. This is where you want to play. You want to play in the top 20% of the market. You want the stocks that are the strongest 20%, and those are the ones you want to look at. So definitely the case here. It's in the chemical agricultural area, which is 49 out of 197, which is 197 being the different sectors of the stock market. This is 49 out of that, so it's a very strong sector. And the question is, can you buy it here? You know what? I think that you could start nibbling at this one because it does look like it's moving up, and it does have a strong checklist. The checklist on this one is 7 out of 9, or 78%, so it's quite excellent. Let's look at the pattern recognition to get the buy point on it. The buy point on this one, 41.15, cup with handle. So we are extended, and this is a problem. We are a little bit extended from the proper buy point. So, would I buy it here? Well, I don't know. I think you could start nibbling at it here. I'd be a little bit careful in here, but I definitely think you could start possibly with a quarter position here. I think that might work, but I would be very careful because I do believe that that it's not, wait to see if it's stronger, but I would say a quarter position. So I think you could definitely look at doing a quarter position here. Now, what do I mean by a position? Everybody asks this, and it's a good question. Basically, think of your portfolio like a pizza. The pizza has 8 slices. Now, if you took one position, that would be one slice of pizza, or about 12.5%. So when you're talking about a half position, you're talking about 6.25%. And when you're talking about a quarter position, you're talking about a little bit over 3%. So you don't want to expose too much of your portfolio here. I think you might be able to do a quarter position here on MOS. It does look pretty good. I'm not in it. Currently, I'm not in the fertilizers. But it is showing some strength. They had good earnings. Their earnings were up 211%, which is amazing. So basically, looking at the fundamental analysis on this one, they have been up over 30% in terms of their sales. 1, 2, 3, 4, 5, 6, 7 quarters in a row. So this is very, very powerful. The last time that they showed a decrease in sales was way back in September of 2020. So the trend of this company, Mosaic, is definitely up. Their sales are up every quarter. And again, any company that can move up 20% in sales in quarter, every quarter, that's one you want to look at. So definitely want to look at this one. In addition to that, their profits have been phenomenal. The quarter just reported, their profits were up 211% quarter over year. So very, very strong. We have a lot of strength. We have a lot of profitability. The question is, how long is this going to continue? Well, It could continue, unfortunately, for a long time because of the situation in the Ukraine, where a lot of these components for the fertilizer are made. So this one definitely is a good one, and it's a good area. Mosaic is one of the leaders, and I definitely think you could do a quarter position here, no problem. Let's kind of look at the fund ownership on this one. 58% are owned by funds, and we have an increasing fund ownership on this one. We're 2,072 funds currently own this, so it is very strong, and we have increasing fund ownership. So obviously, the institutional money is moving here, and that is an area that you want to be in. Again, the whole idea here is to be like a little minnow and follow along where the whales are going, and the whales are going to the fertilizer companies right now, believe it or not, and Mosaic is definitely one of the big ones. So we have a strong cash flow. The price of the shares $52.50 in the after hours action, and the cash flow $7.65. So that's pretty amazing. It is a return on equity of 19% and a PE of 6, if you can believe that. That's very, very low. So these commodity stocks tend to have very low PE ratios. It doesn't necessarily mean that it's the greatest thing in the world, because many of the tech stocks, have very high PE ratios. But remember, they're looking at forward earnings. But with these companies, it's cash on the barrelhead right now, and they are making a lot of profit. So I definitely like this one. MOS, I think it's definitely one you can put in. I wouldn't go in. I'd probably go in with a quarter position here, and wait to see if it gains strength. If it gains strength, then go to a half position, and so forth. So I think that's a very, very good question. Thank you very much for that, bringing that one up. All right, Ricky Kubar, thank you. Long time. Thank you very much. I am doing well, actually. It is not quite as hot in Texas as it was in the last few days. It was just burning up here. But thank you very much for that, Ricky. Really appreciate it. Let's do an analysis of Tesla. Kind of want to step you through kind of my thinking on it, and of course the symbol on that, TSLA. And currently, the total value of the stock, all standing, is approximately $1 trillion, if you can believe that. So it makes it basically the largest automotive sector company, and one of the largest in the world, by the way, in terms of valuation. Right now, strong cash flow. They did just come through earnings. The earnings were up, which was excellent. The quarter that ended on June 22nd. Their sales were up 42%, and their earnings, more importantly, were up 57%. Now, the question is, can you, that's a big number. That's a big number. Tesla is, they do have a full order book. They are basically selling everything they're building right now, and that's very unusual because many of the other companies like GM and BMW and Mercedes, they don't have this capability. They don't seem to have as many issues with supply chain as many of the other companies do. So that's really kind of a good thing. Obviously, though, this stock has been moving up, and the question is it overvalued? Well, a PE ratio on this is 87, which is very high. We just looked at a stock, Mosaic, that had a PE ratio of 6. So that gives you an idea. But the cash flow is strong. The return on equity, 29%. This is a highly leveraged company, but one of the things I want to show you, the number of funds that are investing in Tesla have every quarter gone up. Currently, there are 3,752 funds that are invested in Tesla stock. Now, of course, we all know some of the famous ones like ARK and those kind of ones, but also there's some other funds that are very significant here. So the question is it worthwhile to buy the shares? Now, well, my feeling on this is, based on the last split, which happened in 2020, that was the 5-to-1, of course. I do believe it is. Now, I haven't owned Tesla shares in a little over a year. I stopped trading it basically when it hit its peak. I basically sold out. I sold out approximately. Well, my stop loss was at about 1,042. That's what was my last trade on Tesla was at 1,042. Currently, it's at 875.80 after hours. I have started nibbling here, and I did buy a half position. And if it holds up tomorrow, I will be buying another half position if this price holds up. Typically, the way I like to do it is I like to accumulate shares into the date of record. The date of record for Tesla, of course, is the 24th of August. If you hold shares on the 24th, you will get a dividend of 2 more shares, and that will happen basically on the 25th. That's when it will trade as that's when the split shares will trade. So typically speaking, the when shares split like this, the increase tends to be the most from the date of record through the date the day before they start trading in split shares. Typically, the day they start trading in split shares, the shares will drop. In the case of Tesla, on the last time, let's go back to that. Let's see if I can show you this chart, and it's kind of an interesting one. I did this morning. What happened there? This is the prior split. On the day right before it was trading as a split share, it dropped. It increased in value approximately 81% from the date of record to the date that it started trading as split shares. The next day, the date that actually the shares were issued, it lost 10%. So my strategy, typically with splits like this, is to buy and accumulate them up to the date of record, which of course in this case is the 17th of August, and then hold them until the date that they're going to trade as split shares, and then sell them on the 24th, and of course the 25th will be the day that they trade as split shares. So that's sort of my wait and see attitude. I don't think we're going to have quite as good a increase this time as we did last time. I mean, I just don't think it's there. If we got anything near what we got last time, it would be an absolute home run. But I don't think that's going to be the case. But I do think it probably will trade up. So that's kind of what I'm looking at. That's what I'm looking at. Let's look at Rivian. This is also for Ricky. Thanks, Ricky. I don't know if Rivian is going to do as well here. I'm not even sure that they're really in production. This is. I think it's RIVN is the symbol for Rivian. Is that right? Yeah, Rivian Automotive. I always get this wrong. This one is not. This is really the tale of two companies. As you can see, we're out here at the weekly chart. We have a not so good chart, if you can look at that. Currently, we're trading at about 38, and it's been down. It came out of the box basically at about 160, and it's now down at about 38. So not the thing you want to look at. Let's compare both Tesla against Rivian to kind of get an idea of which we want to buy. And that's the chart of Rivian, and then I'm going to add Tesla to that chart. TSLA. And that shows you. So if a year ago, let's say you couldn't do it a year ago because Rivian wasn't trading a year ago, but let's say it was November 29th of 2021, and you bought shares of Tesla versus Rivian. If you bought them on that date, on the Rivian shares, for every $1 that you spent on Rivian shares, you would have about 39 cents. So not a very good deal. With Tesla, you would have been up, even then, you would have been up 25 cents. Now, of course, that would have been right in November. That was when we had the peak in prices. That was right before the market started to change direction and move into a downward trend. But even with the downward trend, if you had bought Tesla shares on November 30th or thereabouts, you would have been up 25 cents. So for every $1 that you spent there, you would have had $1.25. So it's a very interesting chart to take a look at. So what I would say to that is it's better to buy fewer shares of Tesla rather than Rivian. I wouldn't really recommend Rivian, mainly because it is still a theoretical company. They aren't really delivering product. I mean, they are, but in small amounts. Tesla's order book is full, and it will be for quite a while. So they do have pre-sales. They're moving. Tesla does have pricing power in the electrical vehicle market right now. GM is way behind, so is Ford, and somebody talked about the Chinese EV makers, but they're not exported to the United States, which is the real market for the product. So I would say that still there's really only one game in town if you want to be in the EV market, and that's Tesla. So that is the long and the short of it. All right, let's look at, thanks for Matt. Matt wants to look at WMS. Let's see if we can get a good WMS. And see, Advanced Drainage Systems. That's a very exciting company. It's out of Ohio. Actually, it's a very important company, and they probably are doing extremely well. And by looking at this chart, they are doing extremely well. They're basically at the buy point on a consolidation base, stage 1. So the pivot is 138.02. That's a buy point. It's at 142.05. So we're right in the buy zone. So that's really, really good. The question is, but here's the problem. The building construction materials area is not a particularly strong area of the market, unfortunately. It's 119 out of 197, so it's in the bottom 20%. I typically don't want to buy stocks in the bottom 20% of the market. It's just too dangerous, especially in a downward trending market. But this stock looks quite good. Mostly owned by funds, 54%. And it does have strong cash flow, and it's got a PE ratio of 31, which is a little bit high for a construction-based company. They make basically corrugated pipe, thermoplastic, it's used, in all kinds of markets. But the problem with this, I don't think there's a whole lot of moat on this company. I think a lot of people can do this. So I'd be a little bit concerned about this in terms of a company. Their sales have been moving up very nicely. And the profits, but I'm a little bit leery on buying something that doesn't have a whole lot of barrier to entry. So I would probably say on WMS, I would probably just watch this one for now. I wouldn't be a buyer here, so I would watch list for now. And that's just really, I think that I like it, but I think things are going to have to improve before we can do anything. Let's take a question from TikTok. Thanks for holding here. Oops, trying to get that up. Okay. AAR. Oh, I'm sorry. AAR isn't Aaron's. I apologize. Let's look at AAR again. I may have had it wrong. AAR. For some reason, that is not coming up. AAR, I apologize on that, but it does not look like it's coming up. Your internet is laggy. Yeah, I know. I have a little bit of an issue with that, unfortunately. You would think it would be faster here. What do you think of BABA? All right, good question on BABA. I'm really not a big buyer of any of the I'm not really a big buyer of any of the Chinese stocks. The problem with BABA is, of course, as we all know, Jack Ma, the founder of BABA, basically was under house arrest in China, and they forced him to sell his shares, the Chinese Communist Party. So I don't really trust the numbers from this company, though it is a huge company. I don't trust it for a lot of reasons, just because it's become sort of a cash cow for the CCP, the Chinese Communist Party. So here we are looking at BABA. Currently, BABA shares, which are traded both in Hong Kong and in New York, are down. They were down during the normal session, but they're up after hours at 90.96. Now, here's the thing about them. BABA has a relative strength of 18, which means that it is in the bottom 20% of the market. It's in the bottom 20% of the market. And it cannot, and I don't think that it's going to get any better. Their last recorded The last recorded sales were off 4%, and it was down 32% overall. So not a good situation for BABA. So I would not be a buyer of BABA here. All right, let's take a look. Oh, there we go. AAR is now okay. Let's see if we can get AAR up and see if that works. AAR. For some reason, I am having all this trouble. It's giving me AAN every time. There's something. Yeah, it's just not coming up, unfortunately. All right, what about on semi? Let's take a look at on. There we go, and that's on semi. On semi's down a tad today, but it's still an upward trend. And that's something that I definitely think we can take a look at. I'm going to switch over to the daily chart here, and let's take a look. Down a little bit. I did buy one position, full position at 66.83. We're currently at 67.20, so we're down a little bit, but we're coming down to the 10-day line. Still in this upward trend. I'm still pretty bullish on this issue. 95 relative strength on this one, and so looking pretty good there. The semiconductors have been strengthening, so I definitely am in this one. I'm waiting for it to come up to the pivot. The pivot being, of course, at 71.35. So looking pretty good there. So I definitely like this one. I think it's still buyable in this position, and there we go. All right. How many days or months do you take into account? Very good question. Thank you for that. Let me show you kind of how I calculate that. I do this thing called the small portfolio, and it's not everything that I have, obviously, but I don't think I have it here. But what we do is we take into account. Typically, these are about a month. We take about a month into account. So that's a very good. That's a very good point that you're making regarding the time frame. About a month is what we're trading typically. This is a swing trading. Typically, we hold from about 4 to 8 weeks. That's about the amount of time frame that we hold. So that's a very good question. Okay, let's explain again. Please explain a full position and a half position. That's a very good point. Let's see if I can pull up a. Let's see if I can pull up the a chart that will give us some more information on that. Typically, your let's go to sheets. And what I'm going to do is I'm going to go over to what I call the small portfolio. And in the small portfolio, this is kind of a portfolio that I trade just basically as a demonstration portfolio to show everyone kind of what the situation is and how to trade using position sizes. Now, what is a position size? Well, let's take a look, and hopefully we're going to get, it's going to give us, there we go. So it's going to, let's take a look at the small portfolio, and I'll pull it up here. It's on the view only. All right, click on, come on there. It's taking a little bit of time to come up. There we go. All right. So if we're looking at what a position size is, this is sort of how it works. If we have, and it's taking a second, there we go, and hopefully we'll get the, there we go, we'll get the graphs to come up. Okay, imagine your portfolio as a pizza, and that's kind of what's shown here. And imagine there are 8 positions, 8 full positions. A full position is about 12.5%. So when I'm buying something, I'm trying to buy either a half, a full, or a quarter position. I don't want to buy anything more than that at any time. And the reason I don't want to buy anything more than that is because if I set my stop loss 7% below where I bought it, if I do this, my maximum loss is 1% of the value of the portfolio. So that's why we want to do it that way. Right now, this is my small portfolio. This is what I have in it. I have Petrobras in it. Now I have 135 shares of Petrobras. That's one full position. Actually, it's a little bit more because it's appreciated. You see, it's up 5% since we've held it. We've held it for 8 days, and it's up 5%. So this appreciation is in here. That's why this is 13.2%. Now, if we had no appreciation, this would be 12.5%. We also have a position in ON Semiconductor. We have 30 shares of that, but you see the 30 shares are equal in terms of the size to the 135 shares of Petrobras. So that is a full position as well. That one's closer. That's appreciated a little bit less. It started out at 12.5. It's now 12.9. Now, we just bought a position, full position, in Ollie's Bargain Outlet. Now, we only bought 30 shares of Ollie's Bargain Outlet because of the price of Ollie's Bargain Outlet. Now, unfortunately, that went down a little bit. It went down about 2% somewhere from where we bought it. So that's the fluctuation. So it's equal to 12.3%. So it's approximately one full position, but not quite. We buy it as a full position, but then it moves up or down. And then of course we've had ExxonMobil for a while. This is reversing, and hopefully this will move higher. Currently it's 11.3%. So I have 4 full positions basically, and then I have 4 full positions in cash. So as I'm moving into the market, this is what I'm doing. I'm buying either a half, quarter, or full position, but I'm not buying any more than that. And then if it moves up, then I may add to that. But I always want to make sure that I am only that I'm not buying too much or too little. So that's why we use positions. So thank you very much for that question. It's a great question. Let's look at ADM, Arthur Daniels Midland, and of course this is a foodstuffs company. This is one of the largest producers of grains and that kind of thing. Actually, the largest, I think, in the world is Cargill, and that is a private company, does not trade. So with ADM, we had this very nice double. We had this very nice formation, this double bottom formation, stage 3, and it's moved above the pivot, and it is making a move higher. So this one is definitely one that you could consider. Currently, food, grain, and related, this part of the stock market, is 83 out of 197. So it's not in the top 20%, but it is not in the bottom 20% either. So it's kind of middling. It's kind of middling. But this company has a pretty good track record. Now, because of the war in Ukraine, we're very likely to see higher prices for grains this year, and that will benefit Arthur Daniels Midland. Now let's take a look at their fundamentals in terms of their fundamental analysis. Now this is a very mature company, but yet, as you can see, their sales are going up quite significantly. They're up to 19% last quarter, but their profits were up 62% last quarter. So we have had some very strong action with this one. So this is looking pretty good. Let's take a look at the checklist to see if we can buy this one. Well, the checklist is 78, which is a good checklist, but it's not a great checklist. Where are we falling down? Well, we are more than 15% off the all-time high. Interestingly enough, you want to buy stocks as they're moving higher. You want to buy them as they're moving higher, and typically the best place to buy a stock is when it's within 15% of its all-time high. That typically is a great place to buy it statistically. So it fails there, and their sales are not up 20%, but they're just missed it at 19%. So I think we can kind of cross that one off there. So it's looking very strong. Relative strength line is moving up. It's 19%. Can you buy it here? Well, this is not necessarily the best entry point. This is not the best entry point. We're not quite at the pivot, but I think you could start nibbling here. I think you could probably do a half position. So I would say that I think it's looking good, and I think you could, on ADM, you could do a 1/2 position and wait for the 91.81 pivot to buy more. So that's kind of how I see this one. Basically, on ADM, You could do a half position here and then wait for that pivot to buy the half position more. You'd be a full pivot. You'd be at a full position at that point, and that would probably be a pretty good place to be. All right, let's see. I think we have time for one more from TikTok. Let's take a look. Your internet is lagging. You're not kidding. Oh, I'm so sorry for that. Okay, and I think I'm going to have to figure out something on this with TikTok. I'm probably going to have to use the Wi-Fi on this one as well. So that's pretty much it for today. Thank you so much, everybody, for taking a look at the show. I so appreciate it. And by the way, I need to get out to more people. We have over 100,000 people that are watching, that are liking us on TikTok. I want to get more. I want to get more people on YouTube. So if you could, and I would really appreciate this. Please, 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 please like the show, and that's really important. Like and subscribe. I know that you hear that from everybody. Everybody and his brother says that, but it really does make a difference. So please like the show. It really helps us so much. And by the way, if you're not already a member of the Action Trailer, it's very easy to do. Just go to www.Dallas Trading Floor and just sign up for it. It's first and last name, email address. This is free. By the way, we also do have a trading community. We basically, the first 2 hours of trading, we talk about the trades that we're making, critiquing, and that kind of thing to see if we can all make money in the market together. So thank you so very much for taking a look. I'll be back tomorrow at 5. Happy trading, everybody. Stay pretty conservative here. We're in this uptrend, but it's not really. We're not in a bull market by any stretch of the imagination. This is a bull rally, and they can be very violent to the upside, but they can pull back very quickly. So, always put your stop losses in 7% down from where you bought it, and stay tuned. Hopefully, we'll have some good information on the Tesla split trade that we're doing, and happy trading, and I will see you back here tomorrow at 5.